Hi, guys. Welcome to the How I Raised It podcast, the show where we get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Michael Heyink of Yellow, a startup that uses a distributed network of sales agents to bring solar power and internet to rural consumers in Africa. In this episode, we discuss the opportunities and challenges of building a startup in Africa and serving the African market, raising from development finance institutions, why it's important to lean into challenges, and much more. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out foundersuite.com if you're a startup or fundingstack.com if you are a VC or advisor to get access to an awesome collection of tools for fundraising. It includes a massive investor database, a CRM to manage your raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, email tools, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Michael.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Founder Suite and Funding Stack. Today I have Michael Heyink of Yellow coming to us from Cape Town, South Africa. How's your day or evening going there?
Yeah, awesome. Thanks for having me, Nathan.
Wonderful. You're our first South African company on this show, so you've got to represent. But tell us what is Yellow? What do you guys do?
Cool. So we're an African fintech. We serve low-income customers on the continent, and specifically we finance solar systems and smartphones. And it's really about access to electricity for off-grid customers, people who've never been electrified before, and similarly access to the internet for customers for the first time. So it's pretty crazy to be in 2024 and everybody's seeing the incredible things that AI can do, for example. But on the African continent, still 60% of the population is unelectrified and 80% don't have access to the internet. So there's just an incredible opportunity to use technology to change that.
So you're a finance company. You're not installing the solar and Wi-Fi. How do you work with others to actually get this in place? How does it get into the hands of customers?
So we are a distributor of product on the solar side. So we have our own agent networks in all of the countries that we operate. And so there we're handling stock, all the way from the ports to our agents and then to the last mile to the end customer. With smartphones, so we're financing at the point of sale. There's already pretty good existing retail part of the value chain in these markets for smartphones. And so we partner with small informal retailers and just enable a whole lot more customers to access the internet that way because they typically don't have access to finance.
And what markets are you in currently?
So Malawi was our first market. We started there in 2018, and that's been a fantastic experience for us, a very, very challenging experience to start with, but we learned a lot of lessons and discovered, what we needed to do to be successful in this space. And from there, we went to Uganda, then Rwanda, Zambia, and most recently, Madagascar.
So how's it work, though? I mean, you're going into these markets that don't have Wi-Fi and electricity. How do you extract money from these customers? It's great what you're doing, bringing them, these things, but how do you make a business around it?
Well, it's pretty interesting, actually, because, although there's a massive social impact in what we're doing, the business was founded, purely based on the commercial rationale. So, we were quite heavily influenced by thinking of people like Peter Thiel, which says if you're gonna go and do something new, you need to be a full order of magnitude better than what customers are using already. That's one of the principles that he speaks about in 0 to 1. And prior to starting the business, I was working in private equity in South Africa and looking for businesses that had that sort of potential and found very few. Then started looking into this, and that's where we actually saw that sort of value proposition. So for a rural off-grid customer living in Africa, the way that they are lighting their homes is with candles or battery-powered torches. And most, or 50% of the population have feature phones, 20% have smartphones. Those that have feature phones are typically charging those at a trading center. So they'll walk into town and pay a small retailer there to charge their phones. And when you look at how much that household is spending on energy, just on lighting and charging, on average, they're spending about $5 a month. And the product that we have brought to market, or that we distribute, effectively provides 10 times more power, but at the same cost. So we charge a $5 monthly fee over a period of 2 years. So there really is, that sort of 10x value proposition for the customer. And in fact, that was true, when we started the business. Since then, the technology has improved significantly. So roughly the same cost for us now provides double the output for the customer a couple of years later. And on the other side, the cost of fossil fuels has increased. So even things like candles, the end consumer is paying 2 or 3 times more than they were a few years ago. So that value proposition is really fantastic. It doesn't mean that every customer pays on time, and that's the real challenge of the business. That's the most important element for us to focus on. But yeah, there's just a fantastic commercial opportunity to use technology to get far more value to the customer than they currently are using.
And what's the form factor of this? So I'm picturing a hut with a fairly small solar panel installed on the roof, or what does it look like?
Yeah, spot on. So, about the size of a shoebox, most of the small solar systems. And we've got kind of 2 varieties, one that has 4 lights, phone charging and radio, and then another larger system that ships with an LCD TV, either 24-inch or 32-inch. And that's quite eye-opening, to be honest, because the context of that customer, the rest of the assets they have in their house, it really kind of stands out as sort of like a step into the 21st century. We're seeing some very interesting stuff just in terms of, I suppose, what people prioritize. So, in certain households, we'll find that household doesn't yet have a bed, but they do have a solar system and a smartphone. So they're choosing to access the internet and to have light, ahead of having a bed, which is kind of hard to grapple with for somebody who's always had a bed and has lived in the developed world. But I often say, if you put yourself into that position, you'd probably want to access the internet, first. So it's not that surprising, actually, that we're seeing that sort of purchasing behavior.
Yeah, that's interesting. I can tell you, my teenage daughter would choose the Wi-Fi over her bed. I might be the opposite, but interesting stuff. And how many installations have you guys put in and financed so far?
Yeah, so we getting pretty close to another milestone. We're coming up to 500,000. We'll do that in the next couple of months. And yeah, most of that is solar, so about 400,000 solar, and then smartphones is more recent. So we really only got going with smartphones last year, but that's extremely exciting. That's scaling incredibly quickly. Obviously, the more people in a community that have a smartphone, there's strong network effects there. So as soon as a few of your friends are on WhatsApp, the utility increases dramatically. So we're just seeing that as becoming far more important for people going forward.
What maybe you don't, I'm sure you don't have detailed data on what people are doing on their phones, but what's kind of a before and after scenario, right? Here's a village that doesn't have electricity, doesn't have phones. You come in, the network effects take hold and everyone suddenly needs a phone. Mm-hmm. Are they becoming more productive and or landing gig jobs, or is it more entertainment? What are you seeing the net effects being when you come into a village?
Yeah, so I think there's various different contexts. Um, a village is obviously quite different. Typically a lot of younger people are in Africa, especially at the moment, are moving to urban and peri-urban environments. And in that context, a smartphone, the utility, just in terms of income, is clear. Education, as you say, finding opportunities online, gig work, that sort of thing, and just being connected to find opportunities in a more urban environment is crucial and necessary. And then in a rural environment, you know, if you live in a small village, all the information that you're really getting is coming from people within that village. So your world is just incredibly small. Now, as soon as smartphones are in that environment, even if the majority of the platforms and time that people are spending is on TikTok or WhatsApp or Facebook or any of those platforms, they are getting information from all over the world. So in a very, very rapid, space of time, I think people's worldviews are expanding and they're getting exposed to, things from outside of their village. It inspires them to do different things. So I think that's what we're seeing at the moment. But the vision going forward, I think it's pretty fascinating because, right now, if you're in that context, as the statistics, will tell you, 60% of people are unelectrified on the continent, 80% don't have access to the internet because of the way that the costs of these technologies are coming down, right? And ourselves and businesses similar to ours focusing on the problem of extending credit to low-income customers, because that's actually the key here. To make this work. But because of those dynamics, in 5 years, 10 years time, I think you'll see a very, very different picture where the vast majority of people have a number or have devices and are online. And then with all of the developments we're seeing in generative AI, the services that are going to be available to those people versus the services that they can currently afford or access in the rural environments are just chalk and cheese. So we kind of predict that, as we've seen with other technologies, the adoption of those sorts of digital services, AI-generated medical and education services, those will be adopted far more quickly in emerging markets where the gap between what those customers can access and what they can now get online is just so huge. So I think that's incredibly exciting just for the development story of the continent as a whole. But also for us, as a business, being a part of that journey.
How did you come up with this idea? You were working in private equity, which is, usually a pretty lucrative career path. How did you decide to go off and light up and bring internet to the continent?
Yeah, so I was lucky in the role that I had, the fund that I was with. I spent a lot of time in rural parts of Africa, focused on investments in the energy space in particular, and just, got to see the continent and got passionate about the potential just from what I had seen. And then, stumbled across this business model where, as I mentioned, the value proposition for the customer was so incredible and the size of the opportunity was so large. I just thought, that this as a commercial opportunity just looks like a fantastic thing to get stuck into. And so then, I just kind of left and tried, and I thought it would be a lot easier than it was, to be honest. The first 9 months of trying to start the business in Malawi was, I think, you could sum it up as a catastrophic failure. The basic story is I raised a little bit of money from some investors in South Africa, and I told them, basically the next time they saw me, I'd be back from Malawi and I'd need some more money because, we would have sold our first 400 systems, which the funding had purchased. And effectively, on the way back to the airport from Malawi, I gave away our first system. So basically, we just hadn't got any traction at all. And that continued for some time. And that was really, in hindsight, precisely what the business needed, because at that stage, we hadn't really done any innovation. We hadn't focused on what we now is at our core, which is building digital platforms to enable the distribution and to enable the finance. And so once we started down that route, that's when we started to see, a real sea change in the business.
Yeah, well, that actually feeds my next question, which is great. You see this opportunity, what'd you say? 60% of the continent doesn't have electricity, 80% doesn't have internet. There's a need, but it seems like establishing that there's an actual business model here would be a challenge, because I'm assuming many of these customers don't have credit. They probably don't have, if I'm not mistaken, regular income. I mean, or predictable income, steady jobs. How do you not lose your shirt on this for credit customers? Yeah.
Yeah, correct. So and I mean, it's interesting because, like if I speak to somebody who kind of has no idea about the business at all, they always say, like, why is it that, so few people have electricity and smartphones in these countries? And the issue is purely access to credit. And the issue is that there's so little data on customers that it's very difficult to know who to extend products to. And so all the good customers end up paying for all the bad customers' bad debts. And so really the kind of the golden nugget here is solving that problem. Now, this particular opportunity gives us two chances to do that. The first is that these assets can be locked. So they can be locked remotely, and that means, a customer must pay to get access. So that's, kind of gets you part of the way there. The second thing is that, or that we've tapped into very heavily, is by using an agent network, we can have access to somebody who's in the community and knows that customer extremely well. And so our business model has been to effectively allow that person to make the credit decision themselves, but to align our incentives with theirs very closely. So, we've invested a huge amount of time taking sophisticated credit metrics and turning those into very easy to understand incentives for a rural agent on the ground, so that they can make good credit decisions for the people in their community. And the combination of those two things has been very effective, and it's kind of underpinned how our business has grown and managed to become profitable very early on. Yeah,
that's really interesting. Yeah, that's fascinating. That's a great insight. That the real key is lack of access to credit, and you figured out some ways to give credit without taking a huge amount of risk. That's fascinating. Very good. Well, let's talk about raising capital for this. So let's, how much have you raised so far? And maybe let's start at the beginning. Yeah, please tell me.
So, I mean, obviously this kind of a business, because it's a credit business, and it's a non-deposit taking institution, you are consistently raising capital all the time to grow. Just by virtue of that very long cash cycle from the customer. So we've funded with equity and debt. In total, we've raised $50 million. About close to 20 of that is equity and 30 debt. It started with a couple of private individual investors in South Africa, people from the corporate finance and private equity circles who I spoke to and kind of understood the business model and saw the opportunity. And slowly but surely, we brought on some more kind of institutional investors. So in our Series A venture capital fund called Platform Investment Partners, and then most recently in our Series B, a Dutch impact fund called Triple Jump, and a South African private equity fund called Convergence Partners. So it's been quite a long road of capital raising, just in that, it's kind of been pretty relentless. We've been fundraising kind of from day one.
Yeah, let's talk about that. Let's take these apart. We'll spend a minute or two on each one, but that first round sounds like it was people who you knew from being in private equity, who knew you. I'm assuming you probably didn't have much more than a pitch deck and maybe some financial forecasts, or what?
Yeah, exactly. Nothing. And, so, and in a way, sometimes that's like easier check to get because the opportunity is infinite, and you haven't really come into any of the challenges yet. So that comparatively was quite quick, I suppose. The very first couple of rounds, but then the real challenging rounds on the equity side are obviously sort of from that initial seed investment up to the Series B. That's you're sort of like subscale, and we're doing something where there is quite a lot of risk. There's credit risk, there's currency risk. It's quite unknown for a lot of people. It's a very new and sort of pioneering sector, and so finding investors who can see the potential and understand those risks, that's very difficult in those early phases.
How did you find investors willing to bank on this? Did you only source investor leads from South African venture funds? Are there many South African venture funds, or did you go global?
We did. I think my kind of personal approach to capital raising is about volume, to be honest. Obviously we target investors that have a mandate that's interested in what we're doing, but our experience is just like you've got to just have as many irons in the fire as possible at any given time. So we spoke with lots of different impact funds in Europe in particular, who had raised money specifically for Africa and for energy and for social impact. But in the end, most of our capital has come from purely commercial investors in South Africa, to be honest, which I suppose was quite unexpected when we started. We thought that we would move into the DFI space much more quickly. But I think, that's just sort of a function, I suppose, of the networks that we have, and the way that we've run the business, that commercial investors have seen it from that angle.
Interesting. Let me ask it this way, because we haven't had too many folks on the show raising from impact investors. How do you find impact investors? And by impact investors, I think we're talking about investors that have like a double or triple bottom line, right? They're trying to make a return, but they're also trying to, do some social benefit. How did you find impact investors? How did you source them?
Look, I think it's pretty easy to find, to be honest. I think, with a bit of research, it's pretty easy to get into these networks and understand the landscape. In terms of the sort of stereotype about impact investors and DFIs, that they have longer timelines. I think that's true in some cases. We haven't found that to be true in all cases. A lot of the impact investors that we've engaged with are, pretty similar to a traditional private equity or venture capital investor. It just happens that they have raised their money from a DFI or from some other institutional investor that has a specific mandate.
What's DFI? What's that stand for?
DFI is a development finance institution. So, every country will have a development finance institution channeling money into. It used to be mainly infrastructure in the emerging world, but now it's into, kind of any sort of developmental investment. Interesting.
Maybe touch on this, on pitching impact investors and DFI. I guess how much of the story is, hey, here's our business model, here's the market opportunity, versus here's how we're going to improve the lives of people without, electricity and Wi-Fi.
To be honest, I think it's mainly the former. Obviously what you're doing needs to meet their mandate. It needs to be developmental, and that's got to be clear. Otherwise, obviously, there's kind of like no purpose for the conversation. But the focus, these are pretty astute commercial investors. So if they can see that, it's a risky investment, you're probably not going to get very far. So I guess it's not that different. It's just sort of a different world of investor, and it's also important to communicate the social benefit of what you're doing.
Yeah, cool. Great. Anything different on the B round? Was that, I assume by that point you're having some pretty good repeatable business models, a lot of data and evidence showing you can go into a country and get installations, build out an agent network, and actually have people, pay you. Anything different with the B round we haven't covered?
Yeah, look, I think it's just far more thorough in terms of due diligence, which I suppose is to be expected as the ticket sizes get larger and larger and the investors become more institutional in nature. I suppose that the other thing is also just kind of the timing of these things. We were this was last year, so it took a long time to close that round. Whereas, trying to close the Series A around, 2020 was, kind of just prior to COVID, that was significantly easier just because of the market conditions. So I suppose, it's hard to say whether the differences are the round or just the kind of environment at the time. But yeah, it was naturally a long slog to get the Series B over the line.
All right, last question or two. What advice would you give fellow South African or even broader African founders who are looking to go raise capital? Any kind of just general guidance, advice, tactics, tips? What wisdom can you share? Open question.
Yeah. Sure. That's a very good question. I think the thing that we have learned, and this doesn't just apply to capital raising, but it's applicable there as well, is just to kind of lean into the difficulties and the challenges as opposed to avoiding them. So I think particularly when you're capital raising, there's the desire to make your business look as good as it possibly can be. And so you tend to ignore some of the elements of the business model, which might need work, or the risks which need evaluating. And yeah, in our experience, you always pay for that sort of approach later. So kind of just try and be as genuine and authentic as possible. And I think that, investors are savvy, and they're going to know in any case what's happening. So I think they really appreciate it when founders and entrepreneurs are super honest about the challenges that they face, and they know that all businesses at different times face challenges, and it's about how they solve those. So yeah, I guess that's the big thing we've learned.
If you were doing this all over again, would you do anything differently? Any advice you would give your younger self just starting off?
Yeah, I'm not very good at I don't look back all that often, to be honest. I mean, I'm sure that there's a ton of things that I would have done differently. But, if I look at where we are today and the kind of team that we've got and the opportunity that we sit on, I'm excited. So yeah, I suppose if changing something meant that we might not be here, then, probably would have done it pretty similarly.
Yeah. Very good. How did you find your Maya? Is Maya your co-founder or a senior team member? How did you guys connect?
Yeah, so Maya is an incredible lady, person, and an entrepreneur. I met her on my first trip to Malawi, and she was actually, I'd been introduced to her as somebody to try and help me find a local partner. So she introduced me to like 10 different people. And after meeting all of the people that she suggested, I said to her, you're by far the most, the best partner that I found here. So, shall we start a business? So that's how it started. And she's been an incredible asset to what we're doing. I think our whole management team learns from her all the time, just, from her knowledge as an entrepreneur in Africa.
Yeah, nice. Great. All right. Well, if people want to learn more, it is Yellow.Africa, correct? Is that the website?
That's right. Yeah.
Yep. Well, very interesting stuff. It's fascinating. I've been to Africa a couple of times. It's been a while, but it's be interesting to see how this bringing internet and and power and TV and radio across the continent will change things. I'm sure it will have some pretty profound effects. Thank you, sir, and maybe we'll catch you after your next round and see what's changed in the business. Sound good?
Cool. Thanks, Nathan. Thanks for the opportunity.
All right, over and out. Keep up the good work. Bye.